Hi, my name is Katie Pearson and I will be discussing Case 2-3, the tax return. The facts of the case are as follows. Brenda Sells sent the tax return she had prepared for the president of Purple Industries, Harry Cohn, to Vincent Dim, the manager of the tax department at her accounting firm. After her submission, Vincent asked her to come to his office to speak to her about their tax return. The manager wanted Brenda to omit the lottery winnings from Harry's tax return because he was going to take the standard deduction instead of itemizing. Including the earnings would cause negative tax consequences for the client. He told her it was a one-time request and that the firm expects their employees to be flexible in such situations. In the following three slides, we're going to analyze the alternatives available to Brenda using Kohlberg's 6 stages of moral development. In level 1, there are 2 stages. Stage 1, obedience to rules, avoidance of punishment, and stage 2, satisfying one's own needs. In stage 1, what is right is judged by one's obedience to rules and authority. Brenda can obey the tax rules and include the lottery earnings on Harry's tax return. This will result in adverse tax consequences for him. However, she would be following tax law. By doing this, she risks upsetting her employer and jeopardizes her job. On the other hand, Brenda can omit the lottery earnings per request from her manager. This will allow her to avoid punishment from her manager and it will keep the client happy. In stage 2, rules and authority are important only if acting in accordance with them satisfies one's own needs. Here, Brenda might omit the lottery earnings even though it's against tax law if it would secure her job position. If she leaves the earnings on Harry's tax return, she could possibly give up personal rewards like salary increases or job advancement. In level 2, there are 2 stages. Stage 3, fairness to others, and stage 4, law and order. In stage 3, an individual is not only motivated by rules, but seeks to do what is in the perceived best interest of others, especially those in a work organization. Brenda might be hesitant to leave out the lottery earnings, but agrees to do so in response to the pressure imposed by her manager. She also wants to help the client, and if they take the standard deduction, they will have negative tax consequences. In stage 4, one's duties to society, respect for authority, and maintaining the social order become the focus of decision-making. Brenda might refuse to omit the lottery earnings even if it causes adverse tax consequences for the client, because it would be in the best interest of society to do so, and omitting the earnings would be against tax law. In level 3, there are 2 stages. Stage 5, social contract, and stage 6, universal ethical principles. In stage 5, an individual is motivated by upholding the basic rights, values, and legal contracts of society. That individual also recognizes, in some cases, that legal and moral points of view may conflict. Brenda might weigh each course of action by evaluating how she, Vincent, and Harry are affected by her decision to include the lottery earnings. In stage 6, a person believes that right and wrong are determined by universal ethical principles that everyone should follow. If a law conflicts with an ethical principle, then an individual should act in accordance with the principle. In this case, Brenda would go beyond what is asked of her, norms, laws, and authority of groups or individuals. She would disregard pressure from her manager or the perceived best interests of the client when deciding what to do. If Brenda has no reason to doubt Vincent's statement that it is a one-time request, it should not make a difference as to what Brenda decides to do. In this situation, what is right and what is wrong is clearly identifiable. It is illegal to omit the lottery earnings, so Brenda should leave them on the tax return for the benefit of her conscience, the accounting firm's reputation, and the client. Brenda has now decided what to do, and she's going to have a meeting with her manager, Vincent. She's going to tell him in her meeting her rationalizations and reasons for her final decision. The firm has a responsibility to uphold their social contract. This means that they have a commitment to serve the public interest and operate with high standards of expertise and integrity. If they do not maintain these standards, their social contract is broken, and society could limit the role or the autonomy of the accounting profession. Their conduct should be in accordance with the accounting profession's code of ethics, i.e., IMA ethical standards. These encourage ethical behavior throughout the firm in a way that is consistent with the stated rules and guidelines of the accounting profession. These positive factors influence professional judgment and ethical decision-making. Following these standards enable clients to trust in Vincent's accounting firm, and they create a company culture of integrity, honesty, and moral courage. Next year, the client asked Brenda not to report poker winnings under the $5,000 threshold. Vincent agrees with the client and asks Brenda to do the same thing she did last year regarding omitting the lottery losses and gains. In the second year, Brenda should follow the same guidelines that we've gone through throughout this presentation. If the firm continues to be unethical, she needs to report their behavior to upper management. If that doesn't help, she should disassociate herself from the firm. Thank you so much for watching.